Hello, it's CastAwayTrader and welcome back to my YouTube channel. Today we will continue talking about my most sophisticated and advanced cycle trader indicator. In trading, it's very important to have the correct directional bias. Then you know that trend is up, so you will only take long trades. If the trend is down, you will try to take only short trades. But you really need to understand how to correctly identify the direction of the trend. Each downtrending market has several stages. It starts from a distribution at the top, then goes a breakdown, then move down accelerates, then it decelerates when you see positive divergence in many indicators, and finally it ends with accumulation and a breakout. And today we will be talking how the cycle trader indicators framework can help you to identify each of those phases and trade accordingly. Before we continue, I really need you to read that important disclaimer. In the previous videos, we concluded that daily support and resistance levels calculated and drawn by the cycle trader indicator are extremely important if we need to understand the direction of the trend and we need to identify what phase of the trending move we are in. Again, the most reliable trading setups can be found in a trending market. Either it's an uptrending market or a downtrending market. In a downtrending market, we would favor short setups. In a downtrending market, price spends 80 to 90% of the time under the broken daily support. Those are blue lines drawn by the cycle trader indicator. You can see that once price starts to trend down, it considers those blue daily supports as moving resistance. So it dropped under the daily support here and officially started the downtrending move. It bounced up, tried to break, failed, another breakdown and another push down to a lower low, and here we made a lower high because a downtrending market means that price keeps making lower lows and lower highs. And here's the same story. Price tried to climb over the blue daily support, hung out there, broke down, and another drop. And here, the drop was triggered by inability of bulls to reclaim the broken daily support, the blue line. And as you can see, normally we would start seeing some distribution. You see here the green background. That means that the market was an uptrend, but then price tried to break over the daily resistance, the red line. It failed, broke down again. That was a major failure of bulls, and price closed the day inside the range. So when price spends the majority of the day inside the range, that is a range bound days. But if that range bound days follows an uptrending move, we consider it as a bearish sign, a sign of distribution. That creates an opportunity for bears. The same happens on the way down when we get a strong trending move down, and then finally price could not break under the blue support line, so we consider that range bound day as an accumulation day. That's the first strong warning sign for bears that the trending move down is over and bulls are starting to load up on stocks. Here you can see a similar scenario. The move down was preceded by a distribution day when Apple could not broke over the resistance, broke under the major failure for bulls, and closed the day under the daily resistance, the red line. And we got an evening short setup at 7 p.m. Eastern time, and then we got a breakdown under the secondary support. So when bears managed to break the secondary support, an accelerated phase of a decline starts. And here you can see what the following day was an acceleration down, when basically price did not have any support to work with, it just kept going down. The following day, the same story. You see price spends the whole day after the green secondary support line, it's an acceleration down. but the following day price could not climb over the blue support line, so the price was still trending down, but it was nowhere close to the green secondary support line that was the first of deceleration. And look, the following day, that was January 5th, 2024, when bears tried to break under the secondary support, but then bulls managed to reclaim that support over the day, and another attempt later in the afternoon to break under that level, and again bulls reclaimed it. So that was a double failure of bears. That was not the turn yet for bulls, but the double failure was a warning sign that the bearish move down got exhausted. And here at those points, numerous indicators like RSI, MACD would show you positive divergence, because positive divergence is detected by indicators when we see deceleration of the move down. So price keeps making lower lows here, so it made here a lower low in comparison to that low, but the rate of ascent decelerates. Every downtrending market gets exhausted when bears fail to break under the secondary support, and this is exactly what happened on January 5th, 2024 to Apple. Here we see that double failure of bears to break under the secondary support, and look what happened the following day. The following day, Apple spent the whole day inside the range, so from the trending mode, market turned into a ranging bound market, and it even broke over the daily resistance. That was a breakout. So here we got a failure of bears, and here we got a big win for bulls. Note that day on January 8th, bears tried to break under the blue daily support. They failed. Look at that huge weak line on 30-minute chart. So for those weeks, look at 30-minute charts, and that huge wick that spiked under the support but was immediately bought out. That was the best trigger for a rally. I keep telling you, if bears fail, bulls would step in and we would start pushing price higher to the next important level. If bears failed at the daily support, the blue line, bulls would most likely be able to push price up to the daily resistance, the red line. But together, that was the first kind of bullish day when price started at the support and ended up over the resistance. And it's no wonder that the same day in the evening at 6 p.m. we got an evening buy signal. Price still dropped. It retested the daily resistance, the red line, that in an uptrending market works as a very strong support. Look at those weeks. Bears failed and we got another move up. So what is the secondary support? We know that in a downtrending market, price spends the majority of time under the broken daily support, the blue line, and the question is, if the daily support in a downtrending market turns into resistance, where is the active support then, where a short can be covered? And this is why the indicator calculates and draws the lower green line, which is what I call the secondary support, that quite often actually stops strong trending moves down, like it happened here in Apple. However, be aware that secondary support is not that strong to stop every single drop. When bears manage to break under the lower green line, the secondary support, that confirms that price is in an accelerated phase of a decline. Think about that move like a wave 3 down under the Elliott wave theory, which is a relentless decline that does not respect any support levels. This is when you do not have many pullbacks, bullish pullbacks, and every single pullback up is followed by a relentless move down to a new lower low. So this is when price is accelerating on the way down, not letting bulls to sell the longs even on a small pullback, not letting traders to enter short on a pullback. It just keeps moving down and it feels like that decline will never stop. This is the sentiment what crowd feels when such a move happens. And to detect that kind of a move, you just need to watch the secondary support, and if price goes under that support, quite often it will continue moving down in the same direction for 1, 2, 3 days. So when price kicks in a turbo accelerated mode on the way down, it becomes too dangerous to fight the move down. Every accelerated decline gets exhausted when bears fail to break under the secondary support. If you like to catch a bottom, the trick is you've got to wait. You've got to wait until bears get exhausted. You've got to wait until an accumulation phase starts. That means that a breakdown under the secondary support will inevitably be followed by an accumulation phase. Well, again, price will start bouncing in between the daily support and daily resistance after so many days when bears didn't have any problem to keep price under the blue line, the daily support. This is a 30-minute chart of IWM. Look, it started the move down, the trending move down started with an evening short setup. But look what happened then. When evening short setup is triggered, the daily support, the blue line, becomes your stop line. So bears have to defend that line to confirm that a trending move down started. And it's great when we get an additional strong short setup and wait for it right after a failed attempt to reclaim that blue level, the daily support. And again, I point your attention to those long wicks on top of the candles that go over the support that turned into resistance or just tagged that support. So it's great when you have couple of those wicks, and then that means that bulls failed at that important, that critical level, because the trend has already changed to down. And when you have a downtrend, the early signal of reversal, and then you get a double failure to reclaim the critical resistance that used to be a broken support, that's a great short setup. And here the indicator printed a strong short setup, and look what happened then. We got a really strong breakdown, a move down that soon printed a cover short signal. But look what happened on the following day. So price spent the whole day under the blue daily support. It could not even approach it to retest it. The following day, the same story. Price spent the whole day under the daily support. And only on the third day, bulls tried to get over, but failed, tried to get over again, failed, and the following day it continued sliding down under the daily support until it stopped at the green secondary support. That's the first warning that bears are running out of gas, they are getting exhausted. But look, bulls pushed it up, failed at the blue support, because in the downtrending market, the blue lines, the daily support lines, are the key lines. This is where bears have to defend the trend down. And they failed twice, and we got another move down. This is where your normal indicators like MACD RSI would normally print you positive divergence, because price managed to make a lower low, but the rate of the decline, the speed of the decline would significantly deaccelerate. And here we see the final push down under the blue daily support, but bears close the day over. So that's the first range bound day after a while, after so many days of downtrending move. And the second day was another accumulation day. And it's tricky because when you are a trader and you don't have a framework, you just see a strong move down, and then you see that price is like making some range bound move and it doesn't go up. And the first conclusion, like emotional conclusion, is that bulls cannot move higher. we just building some weak pullback, and most likely you would expect price would continue going down, but in fact that's an accumulation phase. This is where price is building a base, and that's a huge opportunity for bulls. So once bulls manage to climb over the red daily resistance, a new uptrend kicks in. The final straw that breaks the neck of the downtrend is normally a failure of bears to break under the daily support, like it happened here. Again, it's all about failures. Either bulls fail or bears fail. If bulls fail, bears step in and we push price to lower lows. But if under a long move down, bears start to fail, bulls get inspired, and that triggers a new move up. In the next video we will be talking about trading signals like strong buy pullback setups. Now when you understand that we need to take into account directional bias, we will be talking more about trading signals and the way how we should take those signals and how we should trade based upon those signals. Subscribe to my channels not to miss the next video. Good luck with your trading.